This story is brought to you with the support of Internet Exchange Point of Nigeria, Digital Realty, and Precise Financial Systems Limited. For more stories like this, we need you to please subscribe to the channel, share your view, and share the story.
This is DG Vision Network.
The future of finance in the age of AI is a thrilling narrative of transformation, innovation, and caution. Let's break it down by looking at it from yesterday, today, and tomorrow. In the past, finance before AI was once a rigid manual industry. Paperwork piled up, fraud detection was reactive, and customer service meant long queues. But by 2008 and the crisis that came with it, which exposed its vulnerabilities, it became obvious and necessary for the sector to embrace technology. By the 2010s, automation using services like ATMs, online banking, and the internet crept in, but AI was a distant promise. However, in 2012 to 2017, saw early AI adoption with chatbots, basic fraud detection, but adoption was slow due to low data limitations and skepticism.
Beyond sort of going to a digital sort of a .com of a given bank and doing your basic transactions, particularly in the sort of the institutional side of the banking, a majority of the interactions are still sort of relationship based, and it is somebody picking up the phone and calling a relationship manager. So there's been a lot of friction in terms of pushing more digital interactions, and we obviously want to push more digital interactions, for the reason that Mike mentioned. Nobody gets a dopamine hit out of going to a bank branch or calling a relationship manager, whatever. So I think what generative AI is going to do, especially with sort of capabilities like conversational interfaces, it's going to really sort of disrupt that relationship-based banking. And it's also going to help us take banking to the customer as opposed to the customer coming to a bank. We call it, the technical term we use in the banking is embedded finance, right? Institutional banking, and for that matter, any banking should be just like Apple Cash. I love that, right? You don't even think about a bank at the end. You don't think about ACH. You don't think about wire. You're just having a conversation and you want to be able to send money. And it should be that easy, right? I think that is where it's going to be sort of game changing in my view. It's going to take a few years. Again, we have to work through all of the regulations and make sure that when we expose conversational interfaces, one of the speakers said right now generative AI is like a wild animal. It is truly a wild animal, so we need to sort of tame it to banking industry to follow the regulations. But I think that's what is going to be game changing.
Today, AI has become the disruptor in chief with no industry left out. In the finance sector, AI is rewriting finance rulebook with automation. About 70% of routine tasks such as data entry reconciliation is now AI driven. From personalization robot advisors like Betterment, which offer tailored investment plans, to risk management, machine learning, which detects anomalies in real time. For instance, JP Morgan's coin system, AI has obviously become the change unexpected in the area of efficiency. AI is slashing costs. In this, McKinsey has estimated $200 billion to $340 billion annual savings for banks.
Yeah, when it comes to, first of all, when it comes to driving the use of AI, and where you sort of look at the letter is really talking about gaining efficiencies and really making the bank sort of strong and lean and robust for withstanding sort of any macro challenges on in the future. So looking at driving down the costs and bringing up efficiency and bringing up productivity and AI being used to also see where you can elevate revenues it's sort of in every nook and cranny of the bank, looking at sort of the ways that it can create that return on investment. And then, with the AI tools, that then gets passed on to the customer and, in better customer management, experiences, if time, and
Yes.
and colleagues too.
As good as AI sounds, it however comes with its challenges and biases. For instance, AI models can perpetuate inequality like biased credit scoring, trust issues such as black box algorithms, which throws a lot of worries to clients. More on this is the Ant Group's AI credit scoring, such as Sesame Credit. This assesses users' social behavior, not just credit history.
Broadly in two categories. One is with respect to the efficiency of our delivery and software development and ultimately technology transformation, and the other is with respect to the excellence of the customer experience. Right. On the efficiency side, it's obvious we've been able to improve, and thank goodness, because you told me I have to spend 37% more of my budget on AI over the next
Hopefully at
couple
least
of
half
years.
of it with us.
With
but
Deloitte,
yeah.
yeah, exactly. We can talk about that after the panel. I may need a discount. But we are seeing on that order of magnitude also productivity improvements of our software developers as a consequence
Yes.
of AI-enabled coding, right? And that's the primary use case at the moment on the efficiency side. And it's pretty fundamental. We just have to be sure that we are genuinely reaping those productivity benefits. And then on the customer experience side of things, that's where I'd say, certainly speaking for my own institution, but also broadly what I see from my vantage point in the industry, I think we are really only at the very rudimentary stages, right? Text-to-text chat bots are okay, but not a particularly delightful user experience. And I think as we move into more advanced stages of Gen AI and we think about what we may be able to do in voice enabled, right? And really getting back to a customer experience that feels a lot more intimate and personal and relationship driven. There's a lot of opportunity and a lot of runway still for us to go.
With AI now fully with us and finance remaining the core to human existence, coexistence of both in a developmental pattern that enhance human and business growth is key. This is why areas like regulation, where AI auditors are ensuring fairness and global standards, like the EU's AI Act to curb misuse, are in place. In addition, as predicted by experts between year 2027 to 2030, there will be stricter AI liability laws, workforce shift, resulting in jobs lost in areas like data entry, basic analysis. In the same predictions, there will also be jobs gained such as AI ethicists, data scientists, storytelling analysts. For survivability, there is need for upskilling. For instance, finance pros must master Python, machine learning, and ethics. Cybersecurity arms race is another key area to be prepared for. Experts have said there will be AI versus AI. Hackers use AI to breach systems, while firms deploy AI to defend. By 2026, AI will explain decisions like why was your loan denied. By 2027, real-time fraud detection will be 99.9% accuracy. Then by 2028, AI advisors will handle 50% of wealth management. And by 2030, synthetic data will solve privacy issues.
The main users of data centers at artificial intelligence company, they are our biggest customers. But the truth of the matter is actually a welcome technology and a welcome development globally. So we need to get AI to write local solution for our local problem.
Structure we are now is more of like we still believe in the manual way in achieving our aim, basically because of and which I guess that is the area the technology too is going. They are trying to make instead of me seeing you, like the interview, we can do it in another way. You understand? Just to in another easier way. It's not necessary you go to I see you, we see each other before. I can be in the car, we'll do our interview and all this like.
First, I want to say that AI in banking is not new. There's been a lot of usage of different forms of AI for decades in the financial service industries. Like from the 90s, Visa was using neural network-based systems to detect fraud for credit card. And so we understand JPMC has been developing AI for many, many years, and we understand the value of the technology. The interesting thing is the evolution and the acceleration of the technology and the ROI that presents. And so within the next year or so, we estimate that there will be about $2 billion in benefits just for JPMC. And a lot of those benefits will come from fraud. So fighting fraud, fighting fraudsters, fighting nefarious characters that are taking advantage of our financial institution. There was recently a study from NASDAQ, from their criminal reports division, saying that over $3.1 trillion in illicit funds has gone through the global financial system. And that's only what we've been able to detect. So when you look at the impact that AI has, not only to fraud, to be a fraudster, to scam for cybersecurities, but you have to use that to combat fraud. And so we are, putting a lot of effort into combating fraud and making sure that we are doing right by our customers and creating safeguards. And, one of the biggest investments we're making is KYC, which is Know Your Customer. And so we're able to process 90% faster when it comes to understanding, monitoring, onboarding our customers to make sure that they are doing the right things. We're doing that with 20% less human capital, and it's about 230 applications that will be processed a year. So that's one big area that we're leaning into AI. But there's tons of use cases around a big company like JPMC. So we're seeing it in operations, we're seeing it in trading, we're seeing it in customer servicing. In our investment bank, we have our analysts utilizing AI and ML to research potential investments, to make better decisions. We have them using AI and ML to create personalized and customized profiles for their clients, research reports. So the use cases are vast, and we're only just starting to see how they can scale and the impact that they can have. But for me personally, seeing how AI can safeguard our customers against fraud and scammers and nefarious characters, that to me is the most important thing. And I'm really excited to see how we're fighting fire with fire and leaning into the tools at our discretion to help.
With AI now part of our lives, determining our growth pattern, these are predictable means to ensure growth for businesses and individuals so as to balance innovation with caution. First, ethics, audit AI for buyers, and ensure transparency. Human oversight, for instance, fraud alerts reviewed by humans. Reskill, don't replace. Train finance teams in AI, not just coding. Emphasize empathy, creativity, complex problem solving. Collaborate. Regulators, fintech, and banks should co-create standards. Finally, invest wisely. The future of finance isn't AI versus human, it's AI and humans. Efficiency, personalization, and security will thrive, but trust, ethics, and skills will determine success. The clock is ticking. Adapt, regulate, and innovate. Thanks to our partners, Digital Realty, Precise Financial Systems Limited, and Internet Exchange Point of Nigeria, IXPN. For more stories like this, please subscribe to this channel, click on the notification bell, and share the story. Thanks for watching.
For more on well-researched and balanced stories, events, and interviews across business, tech innovation, and lifestyle, please like, share, and subscribe to this channel, www.youtube.com/Digivation Network.